everyone. My name is Reggie McCoy, First Financial Bank. I'm trying to make this as interactive as possible, just to not bore you to death. Thank you. All right, so I'm from Baton Rouge, Louisiana. Of course, the capital of Louisiana. I do love seafood, love crawfish, etouffee, whatever you want to say. Papados is a pretty good spot out here that I feel like is pretty good. But you know, I graduated from Southern University, which is a HBCU in Baton Rouge, about 10 minutes from LSU. Moved to Dallas-Fort Worth Metroplex in 2018, right after college, and some sports I enjoyed: Cowboys, Mavericks, Miami Heat, Texas Rangers, baseball, football, basketball.
Okay.
This is my family. So my beautiful fiance, Gabby, and there's us at a wedding. We went ice skating one time before, and then but she fell like 5 times. But that was after she was able to set up a little bit. Here we went to Tulum for her birthday one year, and that's our 3-year-old Shih Tzu, Coco. So this is just a picture of Southern University. You can go to the next one. Like I said, some of the teams that I enjoy: Texas Rangers, Dallas Mavericks, Dallas Cowboys, and of course the Miami Heat. Hopefully LeBron signs and comes to Miami and back to Miami. Just a few things about First Financial Bank. So our original name was Farmers Merchant National Bank. We were founded in Abilene in 1890. Our home office is still in Abilene. They don't plan on moving anytime soon because we are a community-based bank. We are not in any type of competition with the big banks, Chase, Wells Fargo, Bank of America. We mainly specialize in our communities. So we want to make sure that we are building those relationships from there. We stand by 21 non-negotiables. Today's non-negotiable was we are unique and strive for excellence in everything. We create joy in our workplace and always look for opportunities to wow our customers and our fellow employees. Things that I do to help customers. So I do auto financing, refinancing, home equity loans of credit, bridge loans, construction loans, land loans. And a few things I'm just going to kind of touch on today will just be auto financing, home equity loans, and bridge loans. So here's our current auto rates. Show of hands, who's currently financing a vehicle? Out of those hands, who currently knows their rate? I know you know your rate. Okay, so with that being said, if you don't know your rate, please give me a call. I can go ahead and take a look at that for you and see if we can possibly put you in a better situation, save you on your interest. This is just an example of a current client that I had. She had an 8.1% rate on her current car. I was able to lower her rate down to 5.14%, and that was able to save her right at $9,200 in interest. So just dropping that down by 3% will save you a lot. Home equity loans and home equity lines of credit, which is one thing I mainly do often. With that being said, our home equity loans are mainly used to consolidate debt. So if you have high interest loans, credit cards, installment loans that you feel like you just can't get rid of, a home equity loan would be a great option for you. Home equity line of credit is mainly used if you are looking towards home improvement. So if you're looking towards doing a remodel on your kitchen or remodeling your bathrooms, and you have that equity, that's what you kind of want to utilize that for, because we do it on a 5-year draw period. So you have 5 years to draw from that line, and then after that it turns into a 15-year fixed principal and interest payback. So I get asked this question all the time, especially when I'm talking to clients. How do I calculate the equity? I feel like, well, I have equity in my home, but once I do the numbers, sometimes you technically don't. All right, so we can go up to 80% of the LTV, which is just the loan to value. So with that being said, just a quick formula for you. Home equity is, how you calculate the equity in your home is the current mortgage value, the current market value of the home minus your mortgage balance. So for example, let's say I have a $500,000 home. 80% of that will be $400,000, which means we can go up to $400,000 on their home equity. But I also have to subtract your current mortgage balance, which for instance is $225,000. So from that $400,000 to the $225,000, your actual equity is $175,000 that I have to work with. This example here is a current client that I'm working on. We'll actually be closing at the end of the year. Well, not the end of the year, end of this month, actually. So he had a lot of credit cards on his credit report. Wells Fargo, Citi Cards, Best Egg, Elon Financial, Care Credit, as well as he currently has a home improvement loan with us as well. With that home improvement loan, he basically used it to build he did a pool and a back house, like pool house for him. So we were able to finance that for him. So with that being said, his interest rates on his cards, roughly around 24%. That's not even the actual percentage rate. I just did that as a hypothetical because at that point I didn't know what those rates were, but that's pretty much the average of a credit card right now. So he's paying a total of $2,824 a month just in credit card debt and his current installment loan with us. Show of hands again. How many of you have credit cards open? How many of you guys know the rates on those credit cards? Okay. How many of you guys only pay the bare minimum that they see in the mail? Perfect. So, based on this is just the bare minimum payments that he had. $546, $284, $185, $145, $286. If he just made the bare minimum payments, this is just a breakdown, what we call a loan optimizer. It just shows exactly how long it would take for him to pay that off on a monthly basis if he didn't use that credit card ever again. So if he just cut it up and said, I'm not using it, that's exactly how long it will take. So on average, anywhere between 187 months or 169 months to 268 months. What we're able to do for him is I'm actually doing a $200,000 home equity loan for him, which would be $186,000 just in his installment debt, which would just be the credit cards as well as the loan he has with us. I'm going to do that on a 180-month term, which would be a 15-year fixed rate at 6.9%. So in his difference in monthly payments, he'll be actually saving right at a little over $1,100 a month. And that's going to help him pay that off way sooner than what he would have paid. So on average, just with the credit card debts, he would have paid 286 months of that. We're dropping it down to 180 months, and then also saving him $1,100. Thank you. So bridge loan. Bridge loan is basically a short-term financing that provides immediate cash to cover a temporary funding gap if you are looking towards purchasing a new home. So basically, it's called a bridge loan because it's bridging that gap. So a lot of this is where I work with different lenders like Frank, Cynthia on purchases. Also, Ms. Kevin. So how does a bridge loan help a lender? Generates additional loan and interest income. It strengthens clients' relationships by offering financing solutions in time-sensitive situations. Creates opportunities to provide permanent financing after the bridge is repaid. And also, how does it help a realtor? It keeps their client active. So as far as Ms. Kim, perfect. So let's say Ms. Kim is currently trying to sell a home and also purchase a home for one of her clients. But in order for them to buy the home, they're actually looking towards selling their current home. So either I have to put down a contingent offer, which is what that's called, contingent offer, or I can possibly do a bridge loan. With that bridge loan, we can purchase the new home for them, give them a 12-month bridge loan that they can sit while their property is still currently selling. Once that property sells, they can use those proceeds to pay down our bridge loan. I can pass it over to Frank or Cynthia and say, hey, can you put this on the 30-year fixed mortgage? And they will go from there. So that's pretty much how that works. Great referrals for me. Someone looking to purchase a home or purchasing a vehicle or refinancing their current vehicle. Someone with high credit card balances. So if you guys know anyone with high credit card balances and equity in their home, I could possibly help them save on that interest. Someone looking to buy a new home but has to sell their current property. And then also lenders and realtors. So I love working with lenders and realtors. So that's why I have Frank, who always sends us business here at First Financial, as well as Cynthia. Any questions?
I have a piece of land, have a balloon payment that's coming up, and we want to refinance. Can you help with that?
Got it.
Okay.
Do you have to bank with you to get a auto loan from
Nope.
you? Okay.
But we do have a perk. So if you do finance with us, with your auto loan and set up a checking account for any new or current First Financial Bank checking account owners, we offer you a 0.25% off if you set up automatic payments from your checking account.
Good to know.
Awesome. Thank you.
All right, now it's the portion of the meeting.